It is Thursday, February 23rd. We got a little update from the Fed yesterday. Nothing too surprising. We're going to jump into the minutes from the meeting earlier this month. We have PCE data tomorrow, as well as some numbers coming out around consumer spending and personal income. So we could see the markets act violently as those numbers come out. Before we get going, please hit the like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We are two guys who love to talk about the markets, slightly on the bearish side right now, but please do all of your own research before doing any buys or sells, mainly sells at this point in time. That's what we're doing, not necessarily what you should do. Kevin, how are you doing on this awesome Thursday?
Doing all right, feeling a little bit better. Sick the past few days, but glad to be here. It's been kind of a quiet few days too. A lot of stuff that we were looking forward to. Nothing too much has changed in the market. My vision at least hasn't changed too much on the outcome or the outlook going into tomorrow, but for the most part, doing pretty good.
Good deal. Yeah, there wasn't much going on this week until yesterday when the Fed minutes came out, and that didn't really seem to provide any more insight. They discussed that they're going to have to keep raising rates. You and I were already under the impression that they were going to do at least 3 rate hikes this year. Maybe we see 4. And that they're going to keep those rates higher for longer. So I think it's very likely, like we've said over and over again, that we won't see a pivot until Q1 of next year. I think where both of us still stand on that. An outside chance at the December meeting, maybe, if they want to give everyone a little Christmas present, but it definitely seems like they are still very much committed to that 2% goal. And unless we see it start to move in a sizable way in the coming, the next CPI or the PCE tomorrow, it's probably going to have to be 3 or 4 rate hikes this year.
Oh yeah, 100%. And again, we'll talk about this in a little bit, but the amount of data that keeps being revised. So it looks nice when we get some of these numbers first drop, but then a month, 2 months, 3 months, a year later, stuff like that starts being revised, and we start seeing the actual numbers come in. It's not painting a pretty picture. Not by any means. And we got one of those in GDP. And like I said, we'll talk about that in a little bit. But yeah, I think that 3 or 4 is being pretty realistic for rate hikes coming this year.
Yeah, I think it's pretty much guaranteed 3, decent chance at 4. And who knows, if we don't see these numbers come down meaningfully, it could be we could end up close to 6%. That's the market is pricing in 5.3% to be the terminal rate. It was 4.9 just recently, and they just keep upping that. So it wouldn't shock me if we get to 5.75 or 6%. And yeah, we have the constant revisions. We don't it's tough to know what pieces of data we can really trust at this point.
Yeah, absolutely. Yeah, I'm definitely more on board with probably closer to 6%, to be honest, with these hikes. At that point, we might as well just go to 10. Let me just buy everything super cheap. Let me just, buy a few properties,
a few properties.
Yeah, just a few. It's at that point, it's just if you were not smart, but if you were just precautious and you knew what we were getting into, it's a good idea to definitely take advantage of some of those opportunities. But again, realistically, I think 6% is probably where we're going to end up going, just because you never underestimate someone's intelligence, or never underestimate someone's stupidity. And I think we can't underestimate the Fed's stupidity going into this. And I think that we're going to probably get closer to 6 than we would be to 5.3. So that's just one thing I'm seeing. And I just don't see the outcome being much brighter like a lot of people are seeing. I'm actually seeing this being very similar to September of last year, when everyone thought the Fed was going to pivot and they didn't, and everything just got tanked. So
yeah, we've one gauge that you and I look at is the CME group and their rate probabilities. We saw after the rate hike on February 1st that they had it priced in for the March meeting, 87.5% chance of 25 basis points and a 1% chance of 50. That has moved a little bit. Now it's 73% chance of 25 basis points and 27% chance of 50. If we got that 50, it would put us right in the 5 to 5.25% range, which is in line with kind of where we think this is going. Another 25 basis point hike at a couple meetings after that, and we're right there at 5.75. So I think that when all is said and done, if I had to bet on a peak rate from the Fed, I think 5.75% is where I would take it. And that's what I'm pricing in right now when it comes to any sort of buys or sells that I'm doing. Like I don't think the market has priced that in yet. And so to me, that means that I should be selling some stuff, which I have been, to try to get out of the way, get that cash on hand, because I do think we're going to get a real big pullback.
Oh, 100%. You know, to quote a great man of the year, Times Man of the Year last year, Sam Bankman-Fried, what happened? You know, that was completely like, there was like 1% chance that at one point that we were going to get 50 basis point hike. Now everyone's like, oh, it seems like it's, you know, getting more likely with each passing day. So, you know, sentiment maybe is starting to shift a little bit. Maybe some of the smart money is starting to realize this. There might be opening some big short positions. Who knows? But for the most part, I think that what you said is 100%. I'm on board with that, because even if we look at the stock market right now, we're getting close to, even some stocks, we're getting close to pretty much all-time highs for a few. Like, that doesn't happen, and then you just expect we're going to go into a bull run there. That's just underestimating how bad what's coming is, and people aren't pricing in, like you said, you know, a huge fall that's in the books. We're overbought completely on pretty much everything. Very few things.
Did you see the latest on your buddy Sam? You see that he's 4 more charges alleging he made over 300 illegal political donations worth more than $10 million. So we're getting more, like, things just keep getting worse for old SBF. I'm sure they're letting him out, you know, for good behavior or whatever. Someone bailed him out for $500 million or something. But yeah, it's not looking pretty for Mr. Bankman-Fried.
Yeah, no, he's gonna be. They're gonna let him out for being a vegan. You know, 2 years good behavior, being a vegan. You're out of it. You can't hurt everybody in the world anymore, in the wild.
So let's get into some of the GDP data that we mentioned. You know, we saw the revision there. Did you give a look to that and kind of break down some of the revisions that were made?
Yeah, so pretty much the two things that I saw from the revised data were just the initial growth. Initially, it was 2.9% growth that we had saw. However, with this revision, it's 2.7%. So is the economy growing based off this data? Yes, but it's at a slower rate than we initially expected. So that's not necessarily a great sign when you're looking at a lot of things coming forward. Like, obviously earnings were terrible in Q4. We got all those pretty much in January. And a lot of this is just pretty much telling us that people are not spending. And a huge part of the consumer spending was the reason why the GDP was slowing down. I took down a note. It was, I believe, 2.1% in the initial GDP report. And from this revision, it's actually at 1.4%. Consumer spending. So that's a pretty significant drop from there to there. It's almost 50% of what they initially thought. But necessarily, this is just another sign that, you know, retail is running out of money. And I think this is a really important thing to remember, because we're seeing these pumps, but I keep telling everyone that big money is sitting on the sidelines. I mean, you could go on CNBC and just watch, you know, the market, any market news show in the morning, and you'll see that all these people who are key people, hedge funds, people in charge of investments, they all have huge positions on the side. They're all short. And when you get that paired with, you know, people on Twitter going crazy, going super bullish, saying that, yeah, Big Boy Crypto out here saying you better buy now, otherwise it's going to go to 25 too. And it doesn't. It does the exact opposite. It goes down 1,000. You know, it's pretty much just telling that a lot of people aren't expecting what's coming. They don't understand that consumers and retail right now are pretty much just giving their final dollars that they're going to have on hand. And this data tomorrow is going to be huge. You know, what was it, personal income, or is it?
There's personal income. There is consumer spending, and there's a PCE, so personal consumption expenditures. So I think, you know, the PCE forecast is 4.4%. And I mean, if we come in hot there, we come in at like 4.6, 4.7, it's not going to be good. If that comes in and consumer spending, you know, is down, maybe that gives the Fed a little bit more confidence that, like, you know, inflation has peaked. If we see that the spending is down, people don't have as much money, people are gonna have to lower prices, so it can help inflation, yada yada yada. But yeah, it's important data to look at tomorrow for sure.
Yeah, definitely. And you know, that paired with unemployment too. Like, we haven't heard too many unemployment announcements recently. There might be some in the coming, you know, obviously months as rates continue. But for right now, the only one that I can think of was Polygon Labs. They announced that they were laying off 20% of their workforce, which is only 100 people. But at the end of the day, it shows that that's another sector within, within the workforce, the labor market that is getting hit. I wouldn't have expected a blockchain company to be the one to lay off people. Usually it's going to be your exchanges. It's going to be, where else would we see, in tech companies, stuff like that. But, 100 people, maybe not the biggest deal in the world. But we can't forget also that companies like them have a huge holding in terms of how much of their coin is actually in circulation too. So if things get really bleak, obviously a sell-off wouldn't be unlikely if they need those funds. But they're just trying to cut. They're just trying to cut expenses in any way that they can, and still be lean going into this recession. That again, I still believe we're 100% going into. But yeah, I really expect unemployment to shoot up, and obviously a lot of the data that we are seeing right now makes a pretty good case for why we need to see unemployment rise rather than continuing to grow the labor market.
Yeah, we're continuing to see the initial jobless claims week in and week out come in, a few thousand under expectation. So there's something that's got to give at some point, man. I don't know what it is. It's not going to be good. Like, it's not going to be a pretty situation. It's going to feel gross a little bit, buying when all these things are crashing and people are losing their jobs. But at the end of the day, that's the game we're playing here. And, it is what it is. So that's all I really had on the reports for the rest of this week. On Monday, we'll dive into next week's one. So nothing too crazy next week. And then the week after that is when things will get interesting heading into the this. I mean, I still have March 10th through 15th bookmarked as crazy volatility, because we're going to get unemployment numbers. We're going to get the CPI. We're going to get the PPI. All three of those reports in the span of like 4 business days. I mean, March is going to get interesting.
Oh yeah, March is, again, like I said, even people on Twitter who are astrology, crypto traders and stuff like that, they've mapped this out since last year, and I'm like, now it's starting to line up. It's like, yeah, maybe this is going to be the time that we're going to see some bad price action. But I definitely agree. I think that we're either going to see a spike in inflation in March, or we're going to start seeing some of the people realize, we're not out of this. These rate hikes are going to continue. Like, imagine if the Fed just is like, this is so bad, we need to do 75. Obviously not going to happen, but 50 is most likely what's going to happen. But yeah, March looks terrible. I think that we aren't going to see it happen based off news. I think it's going to be so unexpected that people are just going to be like, what the hell happened? I just woke up and everything is gone. Like, that's the type of what do you call it? Capitulation that I'm anticipating. Like, Asian markets just sell, America wakes up, and the next thing they know, they're worth $4. I'm not making fun of anyone here, but that's the type of just markets I'm expecting.
Yeah, it's going to get interesting, man. What else? I know that there's nothing too, monumental on the charts to look at. What else did we want to, dive into today? I know that was really the only things that I had.
Yeah. Let's pull up the DXY. Let me just pull up the DXY real quick, because the dollar has been kicking ass recently, and I'm very proud to say that I've been bullish on the dollar since later in last year. It's like October. But again, is it going up as crazy as it should be? No, but at the end of the day, this is pretty much telling you that we are going to see this thing pump to infinity pretty soon. Like, if we look at this monthly candle from here to there, this is February's monthly candle. We came all the way up today. We actually put in the high today at 104.779. That was when the month prior, we were down at, what was the low? 101.504. So, that's a pretty good move to the upside. You can just see it. It's a bullish engulfing candle there. But when I look at this and I look at the monthly stochastic RSI, we haven't even gone 100% into the oversold territory yet. That's just telling. And then paired with the macro, everything that we're anticipating, rates continue to rise. Risk assets and these companies that are extremely overbought right now are probably going to take a hit. The dollar pumps, those things are going to be cheap. It's just going to be an absolute opportunity. It's just going to be a great buying opportunity for a lot of people who've had cash on the side, who've been bullish on cash. Let's go to the daily. like I've said, we're completely overbought in the daily. I will not lie about that. We do need to come down for a correction. Where is that going to be? Maybe between this level of support 103.69, which has been pretty good support for us. We bounced off it here and then we shot back up. Then that's obviously the 50-day moving averages right there. And we're trapped between the 200 EMA as well. So we did do this little death cross here. And again, that was so close to the bottom. We finally got there. However, the dollar started to rebound. Fear that the Fed was going to raise rates started moving up. We're at the 200 right now. I think that we probably won't break the 200 yet. I think we're going to have to come back for a retest before, March 10th, March 15th that week. But I think that we're going to find some support either on the 50 or this line right here. And then we'll eventually get a golden cross when the 50 crosses the 200. And that pretty much signifies that we're in a bull run, at least on the daily charts. But that would also reset the stochastic RSIs down there. Let's go to the weekly real quick.
Yeah. After this, pull up the VIX, okay?
Yeah, absolutely. That's another one that's been really interesting. Let's go to the weekly. Obviously, we're hitting this resistance right here. We're going to have to come back down. We see the stochastic RSI is going towards overbought. This could actually stay up there for a period of time. My bad. That's, as we saw, we were oversold here for a while. I wouldn't be surprised if we stay overbought for a period of time, especially if we get tons of bad news in the markets and people are just super bullish on the dollar. But then again, monthly, that stochastic RSI has just got plenty of time to just bleed to the upside. And when I say bleed to the upside, that's good. Bleeding to the upside is always good. Let's see that. And yeah, that's pretty much all I got in the dollar. I am extremely bullish on this. I think it's probably one of the best indicators of where this market is going. It's pretty much leading the way. Obviously, some of the traditional markets are rebounding a little bit, but we did see some pretty good bleeding earlier in the week, especially with the Dow that dropped like 700 points. I can't remember what day it was, maybe Tuesday. But for the most part, everything else is looking just primed for the dollar to pump. And you said to pull up the VIX.
Yeah.
All right. Let's go to the
I also want to go very long term on this, and because I was looking at basically the all time for the VIX and just where it is now and where it's been in this compared to previous financial crises, and it hasn't crossed 40 since October of 2020, and that just doesn't make any sense if you look at everything else that is going on. And if you zoom out on this and you look back to 2008. When it got up to 90, we saw that happen March of 2021 or 2020. I'm sorry. We saw it, shoot up and get over 80. And since that time, it hasn't been, it's briefly touched 40, but I don't think we've seen it peak quite yet for everything that is yet to come. And we've already discussed how whenever the Fed pivots, there's like the last few financial crises, there's always been a big dip after the pivot takes place. Mm-hmm. And so I think that, until we see the VIX go up to a level that is commensurate with how bad the situation is, because it hasn't gotten anywhere near it yet. I know that the VIX isn't the end all be all, and it's just one data point, but it's a pretty important data point. And the fact that it's stayed in this very low area doesn't make any sense. Yeah, I mean, that's a great point. Again, looking at historical data, that's a huge spike up. Obviously, it didn't last super long. I'm looking at monthly. It doesn't need to stay up there that long. It's just volatility until the S&P goes in either direction. But when you look at this and the fact that we haven't hit that above 40, and 40 is not a crazy level when you look at 90 and 80 right here. And don't get me wrong, COVID is a, if you want, I don't know, whatever you believe in, COVID is a black swan event pretty much where we just saw crash for 17 days and that just drew the VIX straight up. But for the most part, when you look at where we are now and COVID and 2008 and 2000, all of those lined up, I honestly think that we are in a worse financial situation than we were in 2020. I think things are just at a point where people are completely over leveraged in, whether it's credit cards or, loans, anything like that. We have a situation where the Fed is fighting inflation and they're doing a terrible job at it. We didn't have inflation that bad in 2020. That inflation is because of 2020. Yeah. And then there's tons of everything is just leading up to a point where we're in a worse situation than everything that's happened before. And the addition of similar things that have happened before. And, the VIX isn't moving at all. It's been at pretty much between 17 and 22 for the past, 2 years or something like that. It's barely moved. But point being that
like you said earlier, something's got to give at some point. Like it didn't just spike up to 90 during 2008. It didn't just spike up to 85 or whatever during 2020. There was a reason why it did. And you can say the VIX is broken or not, but obviously when it shoots up, S&P's down a ton. So
Yeah.
point is, obviously something is going to give at some point. I've given up on timing the market 100% because it's just not worth my sanity at this point. Retail is just finding every freaking penny in the street just to dump in the markets, and it's kind of sad because they're going to wish they had some cash on hand. But I definitely agree with you. I think this VIX thing is when it does go off, it's going to be terrible. Like you're going to see.
I wouldn't be shocked if it hit like 60.
Yeah,
like if you just
same one.
Look back at some of these other, quick wicks up, these green candles right here, and we haven't had anything close to that since the COVID one. And so it doesn't make any sense that we would be in this level. Like the actual volatility index would be this low with everything that's going on. Like it doesn't make any sense to me. This is purely, like, in my opinion, market makers keeping the market where they want it to be. People, we talked about NVIDIA on Monday and how NVIDIA's earnings were coming out yesterday, and it had a monster day up. But and this is from someone who holds like a good amount of NVIDIA. I don't think that their report justified the level of, I think it's 14% increase today. That's crazy. Like $29 a share. That's crazy. Nothing from that report it makes sense as to why that would happen. So I just think that we have too much like exuberance in the market right now. People are too excited for it to be back in a bull market. A lot of people, a lot of people investing right now have never seen a true bear market, have never seen, a 2008 or a 2000 situation. And so it's like, oh, well, it's been a year. I guess that's time for it to be back in a bull market. And I don't think that's the direction we're going to be going.
This is what's really scary for me, because the part is people are making money right now. Sure, 100%. Obviously, 14% is a pretty good return on one day if you had bought, 2 days ago or something like that. But people are just throwing money in there, and then obviously their friends and everyone they know are like making money. It's like, oh, well, if it's that easy, maybe I should throw some money in there. Again, it's the perfect trap for a lot of people, but I don't think people realize how fast the market can change, and it could be without you even noticing. Like it could just be one really bad week, which, oh no, it's going to come back. Okay, let me wait for it to come back. Never comes back. Not for at least a year or 2 years. This could absolutely happen. Like, all right, now you got me all excited. I got to pull up 2008 because that week is one of the craziest weeks I've ever seen in my life. And I just remember it being like my parents watching the news in the morning and just being like, what the frick is happening here? All right, so let's go back to 2008. I got to go 12 months, man. Stupid.
Got you all excited. Got you all hot and bothered over there talking about market crashes and stuff.
There it is. All right, this is the monthly, but imagine if you were buying this, somebody was telling you, oh yeah, buy the dip right here, or like right here.
Or, even go down one more level, like go down like to that red candle there.
Buy this dip. Oh no, 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 buy this dip. I'm not buying this one. This one's not going to go up from here. Rally for 13 years. No, it's pretty much how it is. Like, and again, people are going to freak out because they don't have money saved up. They can't, afford, their bills. They can't afford to throw emergencies, anything like that. So people are going to panic sell. What does that do? It brings the stock price down more.
Will you look? So that top red line where it starts to curve down. When was that? Go down.
Right here?
No, sorry. Where the red line is. Where the red line is that right the 200 EMA?
That's
Okay. How long until it hit that level again?
Let's go across August 2008.
Okay, and let's go across till
the price level, or to the moving average.
The moving average.
All right, then we hit here. Let's say right there. That
2012.
Was 2012. So 4 years. You only missed the release of the PS4. Nothing crazy.
Yeah, I hope this doesn't last as long. Like, I hope it comes back sooner than that. But
here's the thing, man. If you're patient and you know when to buy, you don't. Here, I'm gonna grab this. You don't buy here when everyone's telling you to buy because we're in a bull market. You buy down here. Where is it? right here, like we've been telling you, and then your money doesn't have to work so hard. And look at that, you're already in profit very quickly.
Well,
So,
Kevin, that's assuming that we know exactly when that moment's going to hit, and we don't. So,
but that's also saying that pretty much, again, I can't tell anybody when to buy. Or I can tell them when I'm buying, but for the most part, yeah. Again, make your money work less hard. That's the most important way to build wealth. That's all I'm saying.
yeah, like I did a little bit of dollar cost averaging for about 6 weeks, a few months ago when things were pretty low. Mainly just like Polygon and Chainlink. When Polygon was like 70 cents and Chainlink was like $5.
Yeah.
And I turned off those recurring buys once I hit a certain point because I'm like, nope, not going to buy any more here. I'll wait for it to come back down. And I even looked at like selling it, but like it's not enough to where it'd be really worth selling at this point either. Like, because then I'm trying to, I'm paying the short-term capital gain, like 40% there. And then I got to try to like nail the bottom within, so it just didn't make any sense. But you shouldn't, I'm not going to say you should DCA all the time because you certainly shouldn't, but
it's
like
profitable sometimes.
At times, like when it gets to a low enough point, like I'm comfortable in my belief that in the next bull market, $5 Link and 70-cent Matic will look like a steal. It may not happen anytime soon, but I'm okay hitting that number.
You know where I think Chainlink is going, right?
Like long term or short term?
Like pretty much for the next bull market, like bull market high.
No,
I expect to be in over 100, maybe possibly even like $200 per coin. I'm that bullish on Chainlink, but right now I'm bearish as could be because I don't want to pay $8 for it when I know I can buy it for $3.80.
My guy, if Chainlink hits $200 in the next bull market, I mean, we're waking up in a new Bugatti, okay? Like, holy Lord.
You know what type of car I want? I'm just gonna get a Mini Cooper.
Just get a Mini Cooper and just fill it with gold bars like in a Italian Job.
Exactly. Just drive around. I have Mark Wahlberg will be my driver.
Yep, there you go. Okay, I think we've taken it off the rails enough. Anything else you want to look at before we call it a day?
Let's just look at Bitcoin real quick. Let's see this. Yeah, so Bitcoin's looking like it's down a little bit today. So Big Boy Crypto was incorrect with his tweet from earlier today. But we look at the 50 moving average on the daily. It's crossed the 200 moving average, which necessarily is a golden cross, which I don't know. Usually price goes up from there. However, I still believe 100% that the week, we're not going to see it on that chart. Here it is. When the 200 crosses the 50 and on the weekly, this is way more important than any smaller time frames that you're going to see. So maybe Bitcoin does end up going up a lot higher, like 25, 26, 27, 28. It's possible. It really is possible. However, at this point, I really believe that the higher this goes and the longer this narrative plays out, the amount of liquidity that is just building for people to exit the markets just to get out before the huge crash happens when it's unexpected is going to be devastating. Like I've been saying that 11.5 to 12.5 Bitcoin is 11.5K to 12.5K Bitcoin is a liquidity range I think will get tapped when the market's completely bottoms. However, I'm not opposed to the fact that we could see 10K or anything lower than that. I think it's very possible if this ends up being worse than 2000, 2008 to 2020, because it's got the build. It's built from all of those, and it's got the very similar financial structures to some of those events, and it's kind of just combined. And no one's really pricing in a recession right now. That this could be absolutely catastrophic. Like I don't care if Bitcoin only drops like 50% from like 2018, November to December. I don't care if that. Maybe it drops 69% this time. I think that's very likely. It could absolutely happen. So when I see this on the weekly and then I see more money pouring in after we've made it into a death cross, that just tells me that everything that's being propped up right now is 100% market makers. That, retail is pretty much just buying all their coins, and then the rug is going to be pulled at some point. The question is when, and I don't want to be asking the question, do I want to be in the market right now if I know this is going to happen? So for me, I'm just playing it safe. I'm trusting the dollar. I know you and me were talking about oil and stuff like that, natural gas, and I will make a case here. I will go to natural gas real quick because I think that natural gas is probably going to shoot up. Why? Obviously, we're getting closer to another spike in the war, and that's unfortunate, but is what it is. But natural gas at the height of last year was about $10. Right now, it is about $2.42. The stochastic RSI on the weekly looks like it's primed to go to the upside. Let's go to the daily. Looks like it's making its move to the upside. If this is bottoming out and it's rounding up, we'll probably see a golden cross there. Again, weekly is more important, but then the monthly is completely oversold. So is this a buy for natural gas? It really depends, because right now, if the demand is low, then maybe it's not. It's the same thing with oil. It's like, I think oil is going to take off. Obviously, Russia is cutting off with ties with the U.S. We're seeing OPEC and Russia scale back 2 million barrels a day, and the U.S. has the lowest petroleum reserves right now.
I think I saw, what was it? The lowest petroleum reserve since like 1983.
Yeah, it's insane, which is pretty telling that, it might be a little bit more expensive going forward. Is it a perfect opportunity to buy? I don't really know, because if people are getting laid off and they can't use their vehicles, what's the point of buying gas? So demand is also going to be the question that we're going to have to look at. So I think a lot of things that we're seeing are going to be taken off. I think natural gas might be a better opportunity. I'm not buying natural gas because, again, right now I trust the dollar and I trust my conviction, and I think that the market's going to lead like crazy. But again, when I look at Bitcoin and I see how much the price is being propped up, and we're seeing, especially after that death cross, you're not going to fool me. You're not going to get me into this market. Nothing is. I'm going to stay safe right here from behind my computer screen and watching the entire world burn.
Okay. So if you're in a good mood coming into this show, you may not be in as good of a mood right now. Maybe you were riding high off of a decent day in the markets, and maybe we give you a little different perspective on things. I hope it's a beneficial one, but that is going to wrap it up for today. Yep. Just trying to be honest here. It's anyone can try to spread good news, but we're trying to just be realistic. So that is our take on things. That'll do it for today. We'll be back on Monday, taking a little peek at the data that comes out tomorrow, seeing how the market's reacted, seeing what we're expecting in the coming week ahead. Any final things for him, Kevin, before we head out?
Nothing. Just hope everyone has a great weekend, and don't worry too much about the markets. You know where it's going.
Yep. Ace, good to see you again, buddy. Hope that copper wire isn't burning a hole in your pocket quite yet. But that'll do it for today. Have a great weekend, everybody. On behalf of everyone at FLOLiO, I am Jeremy. That's Kevin. We'll be back on Monday. Have a nice day.
Take care, everyone.